Investors in the Chinese stock market fled, with a net outflow of 169.8 billion yuan in just one day. As China's stock market surged, major funds in the Shanghai and Shenzhen stock markets fled, with a net outflow of 169.8 billion yuan on the 8th. Main funds in the Shanghai and Shenzhen stock markets had a net outflow of 169.8 billion yuan throughout the day, and many leading stocks were sold off. On October 8th, the A-share market fluctuated greatly, with the Shanghai Composite Index falling during the session but rising again in the afternoon. According to a Weibo post by Sina Hotspot, since the A-share market surged at the end of September, more than 100 companies have announced plans to reduce their holdings. Incomplete statistics show that on October 8th alone, more than 30 listed companies announced plans to reduce their holdings. As A-shares surged, in addition to shareholders of listed companies reducing their holdings and exiting the market, major funds also left the market on a large scale. According to the Securities Times and Databao statistics, on the 8th, the net outflow of main funds from 404 stocks exceeded 100 million yuan, RMB, the same below, with Oriental Fortune, Wuliangye, and Chang'an Automobile ranking the top three, all with net outflows exceeding 2 billion yuan. The net outflow of nearly 10 stocks, including Vanke A, Yangtze Power, Kuaichao Mutai, and Hikvision, was also above 1 billion yuan. In popular industries, leading liquor companies Wuliangye, Guizhou Moutai, and Luzhou Laojiao were also sold off by the main funds in large amounts, with the amounts being 2.096 billion yuan, 1.406 billion yuan, and 892 million yuan, respectively. The net outflow of main funds from Chang'an Automobile, Ceres, and BYD in the passenger car sector was 2.015 billion yuan, 1.103 billion yuan, and 862 million yuan, respectively. Power companies like Yangtze Power and China National Nuclear Power also suffered significant net outflows. Databao statistics show that the main force continued to sell liquor stocks in late trading, with Kuaichao Moutai, Wuliangye, and Luzhou Laojiao seeing net outflows of 447 million yuan, 243 million yuan, and 220 million yuan, respectively. Extended reading: How long can the CCP support the stock market? Experts analyze the tricks behind the scenes. Wind data shows that on the 8th, the main funds of the Shanghai and Shenzhen stock markets had a net outflow of 169.815 billion yuan throughout the day. Among them, the main funds of the Chinext had a net outflow of 45.182 billion yuan, and the main funds of the Shanghai and Shenzhen 300 had a net outflow of 55.736 billion yuan. The abnormal movement of A-shares has made many investors wary, and some investors have withdrawn from the market to lock in profits. According to the Economic Observer, Li Hui, an investment consultant at Western Securities, said that during the National Day holiday, there was an endless stream of stockholders consulting about opening accounts and investing. From 2010 to the present, Li Hui has been in the securities industry for more than 14 years and has witnessed the 2014 bull market. Li Hui felt that this wave of the market was more violent than the previous one. On October 8th, A-shares opened sharply higher but fell back quickly, making many investors wary. An investor born in the 1980s said he sold one stock that had been trapped at a high in the morning and pocketed the money. He still has two other stocks that are trapped and hopes to wait for the market to rise further and recover his investment. Another senior professional stock investor said he also reduced his position on the morning of the 8th, feeling that the market had risen too much in the short term and expecting a correction soon. Some investors also revealed that before the National Day, their family members had taken out all their financial management to invest in stocks. After chasing the high and falling on the 8th, they had already suffered floating losses and are currently down nearly 30,000 yuan. Hong Kong stocks plummeted. Jiangxi man stopped his car in the emergency lane of the highway to check. On October 8th, after 2 weeks of rising, Hong Kong stocks suddenly plummeted. A man in Jiangxi parked his car in the emergency lane of the highway without placing any warning signs. The traffic police used a drone to remind him 3 times, but there was no response. The man said he was obsessed with stock trading and took the risk of parking, which caused heated discussion. A video circulated on the internet showed that on a highway, many cars sped past, while a white car was stopped in the emergency lane. In the video, the traffic police can be heard through the drone shouting, New energy vehicles, emergency lanes cannot be occupied. Please leave quickly. The white car did not respond. The traffic police repeated the message 3 times, but the white car still did not respond. The traffic police rushed to the scene on a motorcycle and knocked on the driver's side window. The driver rolled down the window. The traffic police asked the driver why he stopped there, and the driver replied, "Stock trading." The traffic police said, "You haven't even turned on the hazard lights. Are you trading stocks on the highway?" The driver replied that the Hong Kong stock market was open, and he just wanted to check. The traffic police asked him for his ID, but the driver said, "I didn't bring my ID." The traffic police instructed him to exit the highway at the next exit and reminded him to leave, but the man did not respond. The man later explained, "I was too obsessed with stock trading at the time. Today the Hong Kong stock market was open, so I just needed to wait for a while. I took the risk and stopped in the emergency lane to check the stocks." Some netizens believe that the driver's actions were too dangerous and that he should be severely punished. Comments included, "This kind of person should be banned from driving for life. This isn't stock trading, this is preparing to change cars. The road is like his family's, and he didn't even turn on the hazard lights." Other netizens joked, "You want money but not life? The leaks are growing crazy. This is really crazy. Big-headed, stubborn, and the biggest madness is stock speculation. And the stock market is really risky. It almost caused an accident." This IQ is a bit redundant for stock speculation. Recently, the CCP invested huge sums of money, and the Chinese and Hong Kong stock markets soared. The CCP's propaganda machine started up, widely promoting the stock market as a way to make money and encouraging people to invest. However, on October 8th, Hong Kong stocks plummeted, with the Hang Seng Index dropping 9.41%. and the Hang Seng Technology Index falling 12.82%. Some analysts pointed out that this was another round of CCP interest groups harvesting people's deposits. Surveys also show that the proportion of people willing to invest in the stock market is less than 30%, with most people not trusting the CCP's propaganda.
The top leaders of the Chinese Communist Party have successively announced a so-called economic rescue plan, and the Politburo held an economic meeting in September, which is an unusual occurrence. However, some analysts say that while the Chinese economy may respond quickly, China is not far from becoming another Zimbabwe. In addition to the central bank's announcement of interest rate cuts, reductions in the reserve requirement ratio, and printing money to boost the stock market, the Chinese Communist Party also announced plans to distribute red envelopes to low-income individuals. On the 26th, Reuters revealed that the Ministry of Finance of the Chinese Communist Party will issue bonds worth 2 trillion yuan, part of which will be used to subsidize old-for-new exchanges. Another portion will be allocated to families with 2 or more children, providing 800 yuan per child per month, as well as assisting local governments with debt relief. The Chinese Communist Party also plans to gradually increase financial support for small and medium-sized enterprises. In short, the Chinese Communist Party is attempting to plug various holes in the economy simultaneously. The reason for this is quite clear. At the Politburo's economic meeting on September 26th, party leader Xi Jinping unusually admitted that new situations and problems have emerged in China's economy. The self-media outlet Financial Truth commented on social media that the CCP violated normal procedures by holding an economic meeting in September for the first time, and by giving direct financial aid to the poor for the first time. This shows that the Chinese economy has reached an extremely dangerous point. At the very least, those in Beijing feel that the safety of the nation is at risk. The collapse of the Chinese economy has opened the possibility for social unrest, which could shake the CCP's rule. On the 26th, Li Chengpeng wrote that Chinese people once knelt to the government in groups, then jumped off buildings and bridges in groups, and now it has become common to kill officials. This reflects a transition from belief in a better future to despair, where one life is exchanged for another, a symbol of the times. Li Chengpeng compared it to the tragic Jiangnan slave rebellion in the late Ming dynasty, when servants in Jiangnan, the richest region, suddenly rose up and killed the wealthy and powerful. Notable figures like Dong Qichang, Xu Xiake, and Gu Yanwu all suffered as a result, and soon after, Emperor Chongzhen hanged himself at Coal Hill. Regarding Beijing's economic rescue efforts, Li Changpeng remarked that only a normal economic system has an economic cycle, and prescribing the right remedy is what constitutes a real rescue plan. Now, experts say that solving China's economic problems is like a medicine vendor saying, you catch a flea, pry open its mouth, administer the medicine, and the disease will be cured. News Investigation commented that the main strategy of these economic rescue policies is to print money. First, the central bank announced that it would print money to save the stock market. The Politburo then held a meeting, encouraging the financial sector to spend more on infrastructure, ensure the delivery of housing projects, and support bankrupt real estate companies. If money runs out, the central bank will print more. This essentially reverts the central bank and the finance department, which were separated in 1994, to the model where the government can print money at will. This is alarming. It's like they're preparing to set off a grand firework at the end, turning China into another Zimbabwe. News Investigation predicted that within a year, hyperinflation will hit, and another large economic cycle will begin. I feel sad for the people at the bottom, but there's no other option. Those who can leave the country will do so urgently, stockpiling US dollars, gold, and food to prepare for the coldest and longest winter. New situation in China's economy. The Politburo holds rare, meeting as Xi Jinping acknowledges challenges. The meeting was chaired by Xi Jinping, leader of the Communist Party of China. During the meeting, it was acknowledged that new situations and new problems have emerged in China's economy, and the call was made to face difficulties and strengthen confidence. Some economists noted that the phrase, new situations and new problems, indicates that time is pressing, and the tasks ahead are formidable. The Politburo of the Communist Party of China, composed of 24 members, is considered the second most powerful body within the party. The meeting recognized that challenges have arisen in China's economy, stressing the need to face difficulties and strengthen confidence, and to work hard to complete the annual economic and social development goals and tasks. In addition to pledging to meet the year's economic targets, the meeting also vowed to prevent further declines in the real estate market. Bloomberg reported that this seems to be the strongest commitment yet to halt the real estate market's free fall and attempt to stabilize prices. The briefing of the meeting, as published by the Communist Party's official media, stated that efforts must be made to stop the decline in the real estate market and stimulate a stable recovery, while also calling for measures to address the concerns of the public. The second highest authority in the Communist Party emphasized that the government would strictly control the addition of new housing projects and focus on completing unfinished ones as part of an effort to ease the housing oversupply. Bruce Pang, chief economist for Greater China at JLL, remarked, "The stimulus plan approved by the Politburo today represents a strategic shift in macroeconomic policy, moving from scattered policies to a more balanced and coordinated plan." He added that the mention of new situations and problems shows that time is tight and the task is arduous. It is noteworthy that the Politburo typically discusses the current economic situation during meetings held in April, July, and December. According to official documents, the last time such a meeting occurred outside these months was in March 2020, when China was dealing with the coronavirus pandemic. Over the past 4 years, September meetings have primarily focused on internal party discipline or organizational matters. Therefore, media outlets have found it unexpected and rare for the Politburo to convene in September to discuss economic issues.